Hey guys, welcome back to another weekend edition of the Trading Edge. If you guys are brand new, these are weekly videos that I put out on the Tier 1 trading platform and on YouTube, giving you a look around the markets and showing you the best trading ideas that are on my radar for the week ahead. I also like to do a little educational rant at the beginning of each of these videos because I believe that that is more important and more helpful than just sharing ideas. But this week, I'm not going to do that because, well, I'm going to save my rants for the upcoming Navigators Summit. Now, I've been teasing you about this for a while now. The link to sign up is out. I'll put it in the show notes below or in the description box below here on YouTube, but it's going to be a 2-day summit, a short one this time, November 24th and November 25th, talking about the year that was, the opportunities that were at hand, and how we don't think 2021 is going to be so different, which isn't a bad thing because 2020 was an amazing year for an investor that knew what they were doing, and 2021 is going to offer those same opportunities. So make sure you register. It is online. It's completely free. Day 2, we have an amazing roundtable discussion. Trust me, this is something that you're not going to see anywhere else in this industry. We got some big guns coming in, some of the most known people in our industry coming in to talk to you. And yeah, sign up and I'll see you there. Now, let's hop into the chart. Let's first get this disclaimer out the way, and then we'll get going. All right, let's get started on the euro dollar this week. And it's been a pretty decent week of trading. There's been a lot of consolidation in the market, which I know a lot of people don't like, but if you are a pattern trader and if you know what to look for, there are some pretty decent opportunities, including one here on the euro dollar. Now, I believe we talked about this in last week's Trading Edge video as well. If we didn't, I apologize. I do live sessions basically Monday through Thursday, so I kind of forget about what we talk about where. But to give you a brief little recap, here's what we had throughout the week, right? Last week we talked about, this would be on the hourly, but I'm going to draw it out on here. We had, I'll go down to the hourly. It's not a big deal. Not a big deal, Keel. We had a bearish Cypher here on the hourly to start the week. X to A to B. Oops, sorry, let me start this over. Here we go. Bearish Cypher here on the euro dollar. X to A to B. B to C down here, then a CD completion up there. You can see it gave us a little bit of pain, but never put us in any harm of getting stopped out. Just to give you guys a little bit of a point of reference, the Cypher completes at our 786 right here. The zone of completion is really from our 786 all the way to our X leg. So although we played around a little bit with the entry, we were never in any harm. I call this a pain-free trade. It didn't just nosedive back down to profits, but it never really took us into the red, which is a good thing. What happened directly after that, right? After we captured profits on that, we had an even smaller advanced pattern, right? Same thing, Cypher form. X to A to B. B to C, and a CD down here. Now, this one was a little bit more painful, right? You can see that after the initial completion, right, it came almost directly to our profit target, which would have been this 382, and then it took us down, right? And this is painful at the time, but very good for newer traders because you need to experience this pain. You need to get used to this uncomfortable state of being in a trade and being tempted to close your trade and having all the emotions stir inside your head, right? Have you guys ever been there? Right? Give me a yes in the comment section below if you've ever done that. If you've ever been in a trade and you're excited at first because it's going in your direction, then it goes against you, and all of a sudden you start hearing the whispers, just take your profit, get out for break even, it's better than a loss, right? All the psychological battles that we face, it's good for traders to experience this because guess what? This is what you have to do so if you have any dreams or hopes of being consistently profitable over a long period of time. A lot of pain, and one of the main differences between consistently profitable traders, successful traders, and ones that are either boomer busters, so they're good enough not to blow everything, but not quite good enough to make any real type of returns, or the ones that just get skunked out, just fail to market, is discipline. Can you stick to your guns? And as we talked about with the last example, right? Our zone of completion is down till here, right? We should have zero fears of this thing being stopped out or thinking that's going to be stopped out until we violate the X leg, the beginning point of the pattern formation, which is this yellow line. although we put ourselves through a little bit of pain, right? Took us up and took us down on this emotional roller coaster ride. We never did anything to kind of invalidate the pattern. If anything, you got very positive candlestick formations down here in this double bottom before shooting up to eventual profit. So again, good week for patterns here in the euro dollar. Not the easiest trades to be a part of, but no one ever promised you that the market was going to make it easy. Now, enough about that, right? Let's talk about what is coming next. And we have a few things here. There's going to be a smaller one. We can look at both of these. We're going to have a smaller potential pattern formation here on the 60 if we kind of keep with this theme. I usually want to show you a longer approach here. But X to A, A to B, B to C, C to D. This is going to be a bat pattern. So if we continue our theme of consolidation, basically bouncing back and forth across a range here, boop, boop, right? Good opportunity for that pattern to complete as well. Also another one, which is longer term, if we go up to the 4 hour, right? You should be able to see this. Let me just click my Enigma pattern recognition software. Boom, there it goes. Took some time. I got a lot of things running up right now. But you can see another pattern as well, right? Look at this bigger bat. This is the one that I have on my radar in red. X to A, A to B, B to C, C to D down here. Now, this is very early, and I've had a good conversation with a newer trader about this week. We had an awesome trader come into the room. Alex, you get a shout out. Came into the live room, threw himself right into the fray, right? Wasn't fearful about asking questions, wasn't fearful about sharing ideas. And that's what I promote, kind of a confidence, like just throw yourself in there and you learn to swim while you're in the water. And so he was in there shooting ideas and hey, see this on that. I see that on that. And he shot me a message on Instagram afterwards. He said, Akil, I just want to apologize if I was kind of, too active in the live room. I know I was, shooting in a lot of pattern formations and they were really early, but, am I identifying them too early? Am I doing something wrong? And I was like, no. And we had a very good discussion about just as a newer trader, it's better to identify things early. So I'll give you an example. Right now, at this point, I don't really care about the red bat pattern, right? We're at the C leg. We have the C requirement fulfilled. But at this point, we're so far away from that decompletion that it's not worth wasting my mind space, right? I've got other things to worry about. Keep in mind, I've been trading these pattern formations since, when did I start trading patterns? Probably 2009, 10. So going on 10, 11 years now. And I've done a lot of testing on them, some purposeful, some non-purposeful, but I'm very good at identifying them. So I don't necessarily need to put them on my radar. I'm not going to forget about them. I'm pretty organized as a trader. However, for a newer trader where it takes longer to identify them, where there's more chance of you seeing one thing one day but not seeing the same thing the other day just because you haven't built up that experience in the market, I told them identify them as soon as you can. Identify them, mark up your charts, take a picture of your charts, take notes, right? Whatever you want to do it as early as possible. There is no harm in doing it. So even though this is a ways away, it's better to have it on your radar now and give yourself the opportunity to take advantage of it if it does occur versus come back next week, see that the pattern formed and be like, oh crap, I forgot all about this one. Because we know that good trading opportunities don't come all too often. So when they do, trust me, the last thing you want to do is miss it because of some type of error that is self-inflicted. All right, so next up, we're going to hop over and revisit the Euro New Zealand. This was the pair I talked about last week where I was all excited about it. 500 pips of potential profit if I don't blow it. Well, the trade is working well. If you were able to get involved, and I'll kind of walk you back through some of what we looked at this week, if I can erase some of my notes, right? Just to give you a little bit of rewind, we had a break and close below structure right here. You see that red candle, lower low, lower close. We projected a move down to $1.68, and we're looking for a pullback trade. Now, we got our pullback right here at this level. So if you are able to get involved there, you're already on your way. Maybe you either moved stops to break even or took a portion off at the double bottom right here. There was also another pattern formation in there as well, which gave us an interesting discussion about when to do what and dealing with multiple pattern formations, right? There was a Gartley pattern. If we look at our X to A being this, A to B, B to C, and then C to D right here that ran up to hit target ones as well. And now we're retracing back down to this level of support. So what we're looking for if you're a trend continuation trader, what you should be looking for if you're a trend continuation trader is a fresh break, right? Another break of previous structure support, right? We broke our previous structure support here, which put us in a position to look for a pullback and an extension. Now that we've created a new structure low, all we want to do is drag that line down there and wait for the same exact thing. Wait for a fresh break. That way we can identify a violation of previous structure support. Identifying a violation of previous structure support allows us to predict a continuation downward. And we've already kind of done our homework with where we predict the market to go to. So it's just waiting for what I call a fresh break or a reset, and then looking for the same thing over again. You can add something else to the mix here, right? With how the market has formed, right? Again, we've came down. We've retraced back up very, very high. We've come down. We've put in a short retracement. We've come down. We've put in a smaller retracement. We're coming down again, right? Our lows, or excuse me, our highs are getting lower here. Our lows aren't necessarily equal, but we're holding the same level of support. This is going to be descending triangle-ish. So if you're a breakout trader, something else you may want to look for, intraday is maybe one last retracement up here. Put yourself in a position to involve yourself in the trade at this level, maybe hide stops above these highs, and then get involved prior to the breakouts. So the same type of concept of how we teach about trading breakouts. This would be that aggressive way of positioning yourself prior to the breakout. But still an opportunity that's on my radar, still an opportunity that should be on your radar. Nothing much has changed aside from, again, those who caught it up here. Bravo, you've already made a healthy chunk of change, right? Almost 300 pips or 300 pips exactly, depending on where you're taking targets at. But there is a lot more opportunity. Again, 168s, which is a long ways away. This is something that's going to be on our radar for a very long time. So I wanted to take a quick second and review a trading idea we took a look at 2 videos ago here in the Trading Edge. And we looked at it last week, but I think 2 videos ago, November 10th, somewhere around there, or that week of whatever is when we took a look at Bitcoin. But if you remember, we were looking for an ascending triangle, or we're looking at an ascending triangle. We did some analysis on the weekly and we were looking for a break. And as you can see, we got a big pop out of that. Well done, traders. And now the secondary part of that analysis comes into play, right? If you remember, we had our triangle, we had our break, but we talked about that if price action would go further, we have a few things setting up here. If you are a structure-based trader, you've got a nice level of structure. We can even bounce out to a weekly. I believe that's what we went to give us a better idea, right? You can see this level of previous structure high right here, right above, gosh, where are we at here? We're above 19s. What's our highs here? Give me a second. Yep, about 19.6s, around there in that area right below 20s. I don't think we go up to 20s. What's our high? Sorry, I didn't look again. Yeah, right. Yeah, we didn't quite get to 20, so right above there. But we also have an advanced pattern formation in that area as well. So we have really 2 things happening here. So if you're like a CTS trader, maybe you don't trade on the weekly or the higher time frames, or maybe don't trade patterns and you want to take these things into account, you can give yourself a score. And Jason Grayson just did a great YouTube video on this as well, talking about our CTS system and how it's a quantitative way of judging really your discretion in the markets. What I mean by that is you're using the same technical tools, the same technical techniques to analyze the market, but you're assigning them a score. And that way you can add the score and really bring consistency to not only what you look at on a regular basis, instead of jumping around from one thing or the other. You're always looking at the same set of things, but it also allows you to see which trading opportunities are better. Obviously, the higher your score, the better the trading opportunity, the worse your score, the worse your trading opportunity. And then you can do all types of fun things like that as far as being aggressive and trading half positions, full positions, double positions based on the score and all that advanced stuff you don't need to worry about right now. But the point was, and I'm sorry for getting real fast on you, the point was you have a Gartley pattern, which would be 3 points on the CTS score. You have major structure, which would be 2 points on the CTS score. So automatically you have a CTS score of 5, which is considered considered above the minimum. Typically 4 or 3 if you're very kind of aggressive, but typically 3 or 4, somewhere around there is the minimum. Anything over 4, you're starting to get into a quality setup. So keep an eye on Bitcoin now for potential shorts, right? You don't want to be long right now. You never want to be long at the ceiling, and we are very, very close to the ceiling. So look for potential shorts, look for potential areas of relief. And what I mean for that is profit taking for maybe some selling interest, and look for a move back down to the B leg of this Gartley pattern, right above one, look at that 1400s, I guess, right above that area. Keep an eye out for that on Bitcoin. So potential, obviously you're not just selling it at market, or you're waiting for your reason for entry at the highs, right? Preferably we get a test of the highs, a clear sign of rejection, and some type of reversal signal that you can get involved in that reversal signal down. But there's plenty of room here. Again, we're going to be nearing 20s. We can go all the way down to 14s. So keep an eye on this. We are losing momentum as we travel up into this area. Maybe an opportunity for some shorts for the week ahead. Again, I don't know what's happening fundamentally. I don't follow any cryptocurrencies, but this is just my analysis from the charts. All right, so next I want to jump over to the New Zealand, Canada here on the 4-hour chart. And I want to bring this up because this follows up on an interesting conversation we had in the live room. You can see that we've broken out of our triangle pattern here, and we've started putting in another type of simple pattern formation. And this is going to be an ascending wedge, which typically in these type of situations, it's a signal for relief in the market. So basically loss of momentum, right? We just had a breakout, price action came up, we consolidated, even pulled back a little bit, got a big breakout, right? Lots of buy orders into the market. And then those buying orders start to lessen up, right? Obviously, as something gets more expensive or higher, there's less interest. It's less of a bargain, I guess you can say. You also have a little bit of profit taking happening as well. So instead of this big slope in the market, you kind of get a little, we're still moving upwards, right? There's still buying pressure that's winning everything, but it happens at a much lower rate. And typically what you notice here or see after this type of formation is a little bit of relief. Now, what we talked about the other day in the live room is that what makes these patterns tricky, right? Rising and falling wedges, rising and falling channels, is that because the pattern is naturally moving up, it's really hard to pinpoint that reversal, right? Where is that last place it's going to move up before it gives you relief? So it's really good to pair that with the other aspects of technical analysis, whether it's Fibonacci or whether it's structure and stuff like that. If you guys here on the platform, so I apologize for you guys on YouTube, you're not going to have access to this. Well, I mean, if you're a trial member, you will. But if you guys go to the platform, just go and check out the, what day was it? The Thursday New York live room? Thursday, maybe? Yep, Thursday New York live room session. Go to about the 36-minute mark. Big technical analysis lesson. We talked about a lot of stuff in here as well. But one of it was kind of dealing with kind of rising and falling wedges, rising and falling channels, and kind of the mindset with how to approach them, how to filter out the better ones from the worst ones. So thought it was a good example to share because we just covered that a few days ago in our live room. But ascending triangle here, be on the lookout for relief. I would recommend doing some higher time frame analysis and seeing if we're at an actual location, meaning structure, where you think price is going to retrace. If we are, you could have a good setup here. If not, I'd be looking for the opposite and a trend continuation setup and a continued move to the upside. All right, lastly, we're going to take a look at the New Zealand Swiss. Same thing for our chart. You may want to bump out to a daily as well to get a little bit more perspective. But we got an interesting setup here. Really two different things. You can see on your chart there was a butterfly pattern earlier in the week. We hit that 127. I don't trade the butterfly pattern. I'm just not a fan of it. It needs to be very, very specific for me to take it, and those specific requirements don't happen enough for it to be worth my while. I mean, the frequency is just too low for me to waste energy on. But if you are interested, I do like the pattern. I think people mistake, because I don't trade it, they don't think I like it, or because of the certain rules like the D completing above the X. I don't like it. It doesn't really fit my personality on trading, but I actually really love the psychology behind the butterfly. And essentially it is you're playing the relief, kind of similar to what we talked about with the New Zealand Canada, where the market has broken out above the X leg, right? It's the previous level of structure. Right here, this is the X leg. If you guys are new, I'll kind of put an X here for you, right? The market has violated this previous level of structure, right? You can see the red box there. And it's broken out to the upside. And what the butterfly pattern essentially trades is the relief. Basically, it gets to a point where, as I mentioned before, the buyers aren't, the buy orders aren't coming in at the same rate as market gets higher and higher and higher. And you're looking for an area of a little bit of relief, either an area where new sellers are interested for a counter trend trade, or previous buyers are just taking profit. In order to take profit, if you're a buyer, you have to sell, and those sell orders start flooding in. Now, the one thing I would tell you about the butterfly, if you're going to test it, I would highly recommend testing target taking at a retest of the X leg, like we did right here, versus say a 3D2 retracement, right? There's going to be a massive difference between us coming back into previous structure versus coming back into a coming back past structure. And if you're familiar with structure at all, you probably never thought about it in this light, but it makes common sense, right? If structure is going to be so important to you, is it safer to have the target profit at a structure level or beyond the structure level? Just think about it for a little bit. But anyway, we've done that, and I'm going to erase this. We've done that. We've bounced back and whatever, and now we're forming something else. We may be getting ready for the next move upward, and very similar to, in fact, if this looks, it's exactly the inverse, I would say, of the Euro New Zealand, where what do we have? We have ascending lows, right? So our lows are getting higher and higher and higher. I look at this as the selling pressure losing steam, losing steam, losing steam, while the buying pressure has stayed relatively the same. It's able to push it back up to a similar point. We have, you know, these ones in the middle were a little bit lower, but we've made up for that in the last one. I would expect a bullish breakout. This is an ascending triangle, one of my favorite patterns to trade. Now, it's not as good as it looks, right? At first glance, you can see our VS1 level. These are the red and green boxes, visual structure indicator. It looks like we broke and closed above, which is ideal. This is a grade A setup for me. But if we just zoom out a little bit more, and this is why top-down analysis is so important, right? If we zoom out a little bit more to the daily and we just take a glance at this sneaky level of structure here, let's see if I can just nail it on the head now, that exact level. The sneaky level of structure right here, I don't believe we closed above it. We could. I don't really pay too much attention to this pair, but yeah, I don't believe we've broken and closed above it. So we are still trading at structure. Now this does two things, right? One, if we do break this level, I think it'll be an even bigger breakout because there's going to be some stop orders above there. Two, however, it also makes it a little bit riskier trade setup, because instead of violating structure where you can make a clear identification of a break and hold, a break and close above structure, and a prediction that we're likely to continue higher, we can't quite make that prediction yet because we haven't had the violation of it, right? So this can easily still be a double top, as you see here in the daily. So that's the interesting thing about this setup, and that may dictate how aggressive you are, how conservative you are at taking it, whether you're positioning yourself before, during, or after. So that's it, guys. Once again, don't forget about signing up for our event. It's going to be next week, the 24th and the 25th. If you've ever been to one of our Tier 1 trading events, trust me, we'll often say in our little promo emails that there are no event, this event is none like anything else you've seen on the internet, and we're very confident in saying that. If you've ever been to one in the past or asked someone that has been to one, they'll tell you the exact same thing. It's going to be 2 days this time instead of 4 days. It's going to be jam-packed. Again, very special guests coming in for a round table discussion. You don't have access to this type of stuff anywhere else on the internet. So if you're serious about trading, and whether you're new, whether you're struggling, or whether you're experienced, you just want to learn some more, trust me, you want to be there. Sign up. Even if you can't attend live, you'll get the link to the recordings after the sessions are over. But we need your email in order to send that to you. So I'll see you guys at the summit next week. Until then, plan your trade your plan, like, subscribe, hit that notification bell if you are new and don't want to miss my next video. And of course, leave me a comment or question below if you have anything that you want to ask about this video, anything you want to ask in general about trading, or if you just want to say, hey, Kill, good job. I love the videos. They're awesome. Free content. Cool. All right. Have a good weekend. Go Everton. And I'll see you guys next week. Next week.